McLaughlin from K&L Gates, and moderating the panel we have Jazz Oswald from King & Wood Mallisons. Welcome to the panel.
Good morning. Thanks for coming in. I know that, there we go. I know that day two of Intersekt is usually a bit of a struggle in the morning, so we really appreciate it. So I think we'll jump right in. Rather than concentrating on the legal nuts and bolts of digital asset regulation, because I know that I've done a few of these things. Whenever you start talking about regulation and it's not just to a room full of lawyers, people's eyes glaze over. We might instead set the scene as to how each jurisdiction is kind of approaching the regulation of digital assets, and then look at the attitudes and those approaches and how they're impacting businesses on the ground as they kind of try to build and develop product. So in our pre-panel discussions, we saw, I guess, three broad themes. The drastically different drivers and approaches of regulating assets in Hong Kong, the US, and in Australia. The tokenization of financial markets and systems, which has become one of the key focuses of the digital asset sector. And then central bank digital currencies and stable coins as well. So I think it would probably be pretty suitable for our first stop to be Hong Kong, which is probably one of the most developed regimes in the world at the moment. King, it's been about a couple of months since the regime has kicked off. How's it going?
I guess if I have to use one word to describe, it's overwhelming. Because ever since Hong Kong announced the policy stance in welcoming crypto, and I have to say this is when the whole FTX situation took place. So that literally set the whole world, particularly media, into frenzy mode. And since then, we have this inflow, flocks of people coming to Hong Kong. They can be the exchanges, the custodians and the blockchain foundations. I mean, you name it, the whole value chain. And we try to track. After a while, we gave up. I think we probably have welcomed over 500 Web3 digital asset-related companies in Hong Kong just the past few months alone. And just the VCs alone, just to put in perspective, I've personally talked to over 40 Web3 / digital asset-related Web3s. And the money they're managing is between 30 million to 1 billion. So some of them are major players. So the point I'm trying to make is that there's a lot of activities going on. Now, of course, I think a lot of people follow the regulatory developments. So that's why people are more concerned about the June 1st dates when we launched the VSP, the Virtual Assets Service Provider regulatory regime. But then there's just so much more other things happening. From the security tokens, because Hong Kong is very big in promoting the real world assets and how we can tokenize them and in a way facilitate better and faster, cheaper fundraising for the mid-tier, the SMEs and so on, between 10 million to 200 million US. There's a kind of sweet spot for STOs. We put a lot of work behind this. There's stable coins coming up. There's CBDC projects. So I can go on and on. But in a nutshell, there's just a lot of things happening concurrently.
Okay, it's very exciting. I've heard good things. Effie, on the CBDCs and stablecoins, I think that's a pretty good segue for you. Currently working at Novarti and participating in the RBA's retail CBDC pilot. I guess what's your perspective on how we're going in Australia?
I'm hesitant to use only one word, and I think everyone in this room would hear this one word over and over in all the LinkedIn posts, in all of the conferences, and the word is lagging. So when we look around the rest of the world and see what's happening in Hong Kong and what Jeremy's going to give us some information about the US, and no one on this panel is really talking about the EU either with Mika, but it's very clear to say that Australia is lagging. What that means, and I think this is what we'll talk about a little bit more, is how that affects on-the-ground businesses who are operating with digital assets, either through offering products or services, offering solutions, and how they're approaching that. And what it means is that there's a lot of overhead. There's a lot of overhead in getting legal advice that could be defunct in 3 minutes' time. It could be, we hear the Treasury is going to come out with regulation, ASIC's going to do something, Senator Bragg's bill in play. There are so many pieces that are still in play with no clear resolution as to when it's going to happen. So that supports my word lagging.
Okay, thank you. All of those things sound very problematic, except the expensive legal advice. That sounds fine. Jeremy, we hear a lot about the States, a lot of doom and gloom. Everyone's very upset. What's it like on the ground, particularly in light of a lot of developments over the past couple of weeks, even with new bills and new case law? How's it going?
Yeah, so if I'm going to jump on the one-word trend, I would probably say chaos. To be a lawyer in this space is quite difficult to advise clients. The clients obviously want a clear answer, and it's frustrating that I can't give them one. But I'm starting to see some hope. I mean, I've kind of viewed the regulatory trend in the U.S. as going from relatively clear down to the pit of chaos that we're just now, I think, emerging from, and there's some light that we may come out of that. So, I think in the early days, the only real regulation in the U.S. was happening at the state level, and that's still the case, but it was at least pretty clear what you needed to do, the licenses you needed to get. It's whenever the federal regulators, mainly the SEC, but also the CFTC and others, started to get involved, and I'm sure you're all aware, our SEC believes everything is a security. And so that caused a lot of, the market started to close up. People delisted tokens. Some companies pulled out of the US because they saw how aggressive the SEC was being, and continues to be. This week, the SEC issued a consent order against an NFT issuer, which was the first that's happened in the US. But I do view hopeful as finally there are case laws, there are cases that are being filed, and the decisions have been going strongly in the favor of the digital asset industry. There have been some good cases out of mainly the Southern District of New York, which is a very prominent district in the US. Both cases have said digital assets in and of themselves are not securities, which Gary Gensler has said that they are. And kind of absolved a number of trades from having to register with the SEC. So I think now that the courts are starting to rein in the SEC a bit, I think there's some hope, and that there's the industry is kind of igniting again in the U.S.
So we spoke about this briefly before the panel, around how you have helped some Australians jump into the US. How have they found that transition into a market, or between two markets that are so drastically different? Was that a difficult thing for them, or did they adapt?
Yeah, I think the biggest difference, and whether it's from Australia or clients from the EU, I've helped come to the US as well, is I think there's not a big understanding about that in the US. A lot of this is regulated at the state level. And so if you want to offer a product in the US, and you're going to hold someone's digital asset or their fiat currency for that matter, you have to have 50 different licenses in order to offer that across the United States. And you can't get one and passport it to other countries like you can in Europe. I think that has been by far the biggest shock that I've had to deliver to people, and I'm tired of giving bad news, but they're usually shocked when they hear that, because these licenses take a long time. They're very expensive to get. There are ways, I help them a lot structure their product differently so that they can avoid the licenses, but that's something they weren't anticipating, right? So how they offer their product in the US is different than how they're offering it in other places, because they had to do this in the US to avoid licenses, or they undertook a 1.5-year initiative to get the licenses. And I think that has shocked a lot of people, that it's kind of such a patchwork and it's really not put together.
So as three people that would see a lot of product being built and being involved in the building of product, it'd be really interesting to know from your perspectives, what are the roadblocks that are hitting you, or what are the things in your given regime that you think actually aid you in kind of moving forward? And when you talk, and when people talk generally about wanting clarity, what does that mean for you, and how can we move forward?
If I can take this one. So we're in a conference which is all about fintechs, and I'm actually going to switch it a little bit to say that yes, there are roadblocks. However, if you look around in this room here and in the whole conference, we're not seeing crypto hoodie people, right? It's serious business, and people understand that they need to be responsible. We're dealing with people's money, we're dealing with financial assets, we're dealing in the financial system, and therefore you apply all of the thinking, the structure, and the rules that exist in the main today, and apply those to the products and services you consider building. So when you're looking at offering, let's say, a service that's dealing in funds management, you're not going to go into that environment whether you have a digital asset or not by not looking at what is it that you need. So there's a lot of innovation. The only roadblock I would say to that is committing with, if I say, I hate the term anything over 100% because there's only one such thing as 100%, there's no 1,000%. So, but if I would say one thing that does tend to, get people's back up in terms of roadblock, it is about the fact that, but what if the regulation comes in and it does X that we don't know, and that affects our whole business model? So that's the only roadblock I see. Otherwise, I think everybody's approaching it innovatively and cautiously and responsibly, and applying frameworks that make sense in a financial system.
Well, if I may, I've gone through this cycle from very negative sentiments to now quite positive. Now, one of the things that I have personally lived through is just the gap of information. Now, the point I'm trying to make as an example is STOs, because the Hong Kong government is very much behind the promotion of STO security tokens as a new way of doing fundraising at much lower cost and faster, cheaper. Now, so probably about 12 months ago, well, I think 12 to 18 months ago, now actually SFC has always had some kind of guidelines for the operator to do STOs. So as from an SFC, the regulator standpoint, they thought that the job is done, okay? Now, but then as I talk, my job is to talk to the private sector players on a regular basis. But from talking to the industry players, they thought, oh, the rules are not very clear. So that's why we are still on the wait and see mode. I was like, no, actually, I know Elizabeth. She's like super, super supportive for STOs. You must get it wrong. So I think this is a gap. So what I did was to arrange a bunch of closed-door meetings so that the roadblock, so to speak, from the regulator is actually not there. So I just got the person in charge of the regulator, is a lady's name Elizabeth, and got her in the room. Okay, I said, Elizabeth, please, tell the players what you're thinking, and she's supportive. And since then, I think the whole market, the word got out. So there's just so much experimentation right now. And again, in interest of time, I only cite one example. So there's this cruise operator. This is my favorite example. There's a cruise operator, and they got hurt during COVID because the cruises just didn't sell. And then that operator wanted to bounce back, but since he's operating a very niche business, he wanted to have a very sort of a catchy kind of PR angle. And guess what? He was trying to launch one Hello Kitty cruise. Okay. Now again, as an operator of cruise lines, he had no business in owning a ship. It's expensive. It costs at least $50 million US, what I was told. You have to decorate the ship with the Hello Kitty themes and everything, and do promotion. So the bill for that is $100 million US, which he didn't have. So then he thought, okay, why don't I try the bank, which he did. And guess what the reaction would be, right, from bankers? Said, nah, probably not. So then now he's not going around talking to, there are a lot of family offices in Hong Kong. They like to get, their feet in this game. But then they are also afraid of the whole FTX kind of situation. So they thought, okay, if this is something with a real business, you can calculate the cash flow. It is a profitable business. God forbid if pandemic doesn't hit us again. It's something, it's a manageable risk. But yet again, it's a sort of new asset class, so to speak. So he was able to get quite a lot of attention from the family offices to try to buy his tokens as a means to raise the funds. So this is just one example that we are seeing a lot of experimentation in the market today.
I'll just add one quick thing. I think the slight difference between what I heard you guys say and the U.S. is the U.S. obviously has a lack of regulation, and that's problematic. But to me, the big roadblock is not the lack of regulation, but it's not even clear in the U.S. who is supposed to be regulating. So it's kind of like mom and dad are fighting, and like the industry is just sitting here waiting for one of them to win. And I do think there is some hope, but like I said, the courts and Congress is trying to pass bills really just to say this is who regulates this type of asset, this is who regulates this type of asset. Then they can move forward with the rulemaking. The industry, I think in the US at least, has been very vocal and attempting to, Coinbase, for instance, has petitioned the SEC relentlessly, met with them many, many times, and said, regulate us, please, just make it clear. And then the SEC filed an action against them. So I think the big roadblock in the US is just that regulators fighting over whose turf it is.
I think that's the same here. That's one of the big things that's coming out is who's going to regulate. We don't want 6 people regulating. We don't know who is going to do the regulating. And the regulatory unclarity is just, it's prevalent everywhere you look. I think you guys are a little bit further down the track in the US, and so I think there's even the lack that you talk about is more than what we have here. But in terms of openness, absolutely, the industry supports a collaborative approach, and all the regulators are open to talking to all of us, and we all actively do so. So we may not be as vocal as you guys, but I think some in here would argue that we are just as vocal.
Yeah, and I definitely agree that we take an incredibly collaborative approach here in Australia. I mean, today at this conference, Treasury in 3 minutes is doing a roundtable on their approach on crypto assets. So, they're doing their payment stuff. There's a lot of regulators here today and yesterday to talk about all the different things that they're working on and thinking about. So if you do see them hanging around, I would encourage you to talk to them because they need your views on how we go forward in the industry. I know a common thread with all of what we've been talking about, and FTX has come up a number of times, and it's just that point around systemic risk. And if we're thinking about financial markets and how that is married with tokenization, I think it's really important to think about how systemic risk fits into that. And crypto was built on the idea of creating something that's trustless. So we no longer have to trust people, we trust technology. We've seen that doesn't necessarily work all the time because there's always something or someone you trust in a value chain, and then there's always risk associated with that. So I guess I'd like to know anyone's views on the panel. Does this concept of trustlessness, is it fundamentally incompatible with our use of this technology in financial markets?
I mean, the first thing that comes to mind is I think the incompatibility rises because, again, we keep talking about regulation, but financial markets obviously are incredibly regulated, and so if I'm a regulator, I'm trying, the trustlessness, I think from the consumer aspect is great. I think there is a lot of interest in that from the consumer, but as a regulator, who am I going to go after whenever this market melts down? Actually, breaking news, there was a case decided today in the US, I haven't read it, but there was a class action against Uniswap, a DeFi platform and protocol, and the plaintiffs alleged a lot of SEC violations. They hadn't registered, et cetera, and the judge threw that case out today and dismissed the claims, saying that DeFi is not, that Uniswap isn't responsible. I haven't read the details, but I think that's indicative of the bigger question of, I think the trustless atmosphere is great for consumers. They don't want to deal with the big bank or the traditional financial institutions. But from a regulatory standpoint, then whenever it goes wrong, who do you go after? I think that's the big question mark.
Well, I'm trying to look for my slides because we actually got a professor in Hong Kong that is well known about the digital assets circle. And we asked him, he spent about 4 months to come up with a paper. I'm trying to find that number. But essentially, his conclusion, based on that study, is that even though the whole blockchain is supposed to be decentralized, but based on his study, yes, the technology is decentralized, but because we are humans, based on the economic drivers, actually it is centralized. And he was trying to prove this point based on the concentration of the number of owners that own the Bitcoin or to control Bitcoins and controlling Ethereum is only in a very small handful of people, despite the so-called decentralized technology. So the point that he was trying to make is that, yes, the DeFi technology is great, and right now we are trying to have the best of both worlds, that because we know people are driven by economic incentives. So what if we have the regulatory environments to protect the little guys, but in terms of deploying the technology to make things work, we use the latest and greatest DeFi technology in a regulatory environments where we set the fair rules. So this is, again, we are still experimenting, trying things out, but this is the direction that we're heading.
Evie, did you have any thoughts, I guess, in the context of the issuance of a stable coin or anything like that? Like, was this something that you tackled when you were working through your product?
Yeah, for sure. And I think the first aspect was about the risk. I mean, if you see our risk assessment, it's, you know, pages and pages and pages long, because that's the number one thing that you're scared of. You want to protect your consumers, protect your businesses, protect yourselves, protect the entities. So there's all the protections that you have to take into consideration. And without the regulation supporting it, you have to approach it from a position of, apply a framework that makes sense in that space, whether that's regarding treasury management or AML or operational governance or whatever it might be. You know, I think we've got 7 pillars of our framework. I know it's not very catchy to have 7, but that's what there are. But risk is definitely the number one factor that we considered when looking at the establishment of stablecoin. The trustlessness component, it's a very interesting discussion and it's ongoing, and that, you know, to support your discussion there about the blockchains and which ledgers are, you know, primarily owned, if you like, by or operated by a small percentage, is one of the reasons we also decided to be blockchain agnostic and sort of spread that around. So that's one of the approaches that we took to deal with that aspect.
Great. That's very interesting. I mean, it's something that we think about as well with our clients, with how does the actual system factor into the legal risks and how you actually deal with potential consequences. How are we going for time? So it's 2 minutes? 2 minutes, great. All right, maybe one last question. I'm just thinking in terms of, like, what are we seeing the future, within the future? Because this industry, as we have discussed, was built out of the GFC with a cypherpunk and hacktivist ethos backing it. Do you see a place for that in the trajectory of this industry, or do you think that this is going to be a more bank-centric and institutionalized market going forward?
Well, I guess besides finance, in which we are, perhaps the short answer is that we talk about STO. We actually have industry leaders to try to do estimation. So let's just say that we are able to use this new form of fundraising. How is that compared with, say, IPOs? Now, so for IPOs, the charge is roughly, say, 5-6% of the money raised. But then based on estimation by the industry leaders and using the STO routes, you are able to easily shave off 3 percentage points from the cost of raising money. So therefore, instead of 5%, it's like 2%. So that in itself is creating an enormous advantage to promote more mid-sized fundraising. So this is one. Now the other is that I think for those of you who have bought the monkey profile picture, the Boy Yacht Club. So behind the scene, there's this company, Yuga Labs, has done a fabulous job to promote, you know, the membership cult-like behavior among the members. And we have been very privileged that we're able to invite them to come to Hong Kong during Hong Kong FinTech Week to run their Ape Fests. In fact, I was told when I was in meeting with them last week, they already sold 3,000 tickets of the die-hard fans, and then they'll be flying over, you know, to Hong Kong. Now, the reason why I bring this up is because we are now seeing I would say, the crossover, if you will, from the sort of finance application to the arts and culture, the other non-finance sector. And this is getting a lot of traction. Because as a matter of fact, Hong Kong is the second largest art auction market behind New York. So there's a lot of pretty rich people buying arts, including digital arts. So this is why Ape Fest and those guys are coming over.
I think 2 factors. I don't think it was all just born out of GFC. I know we're at a FinTech conference and we're focusing on digital assets in relation to financial services or products, but digital assets is much more than that. And as King's alluding to, it's NFTs, it's art, it's titles, it's assets like homes and all of the other pieces that play a part in it. So it's the evolution of both technology and the globalization factor that's basically saying, how do we make this more economic, faster, more transparent, and easier? And so I don't think it's the result of any particular crisis. It's just evolution. It's just we're all moving forward. There was alternative payment methods before. There were blockchain methods. So I don't think that there's any stopping us now.
Yeah, I know we have to go, but I largely agree. I mean, I think that the tokenization, blockchain decentralization has changed things already. It will continue to change things. As you said, there's no stopping that. I think that the original ethos is still there. Like, we're going to see that continue to push. In my mind, right now there's exchanges, there's centralized crypto exchanges, but now DeFi to me is where like the true ethos has moved to DeFi. Once that regulators get their hands around that, I think something else will come up. That the ethos will stay alive, but I think the main portion will come under kind of it will be traditional. So.
Great. All right, we're at time. We could keep going, but thank you so much, everyone, for attending. And remember to talk to the regulators.